Okay, so a few things. I had a video recorded for my video per day challenge and it's not working. But then I stumbled across this tax exempt space that's happening and I wanted to come on to talk about it because as a CPA, I think that I can lend something to this tax exempt scenario that's happening. And first, I just want to talk to you guys about what tax exempt status means. Some of the creators that I saw on here, they mentioned, it's funny enough, they mentioned if you're a W 2 employee to go to your HR office and then do exempt. And then they compared that to self employed individuals. So I want to first talk about what like taxes, the tax exempt status would do and all of that good stuff. But first, who am I? I am Atia Brown. I am the Savvy Accountant. I'm a CPA by trade. I'm licensed in both Canada and in the US. And I have a goal to save my community $1 billion in tax savings. So I want you to build wealth by understanding the taxes and understanding the tax code because that's what I want. I think that I explain taxes very well, and I want you to know that the tax code exists so that you can reduce what you have to pay legally in taxes so that you can build wealth and do other things with it. I'm not a financial advisor. I'm not going to tell you what to do with the money that you save, but I do want you to save money on your taxes. So, I want to first talk about W 2 employees. So, when you are an employee, and so your employee status, you completed a W-4 at your job, typically on day one. Your W-4 is going to talk about your exemptions and all that good stuff. They did change the W-4 recently, but that's going to be where your withholdings come from. And what the withholdings are, the government works on an earn and pay system. This is how I like to explain it. So you earn income, you pay taxes, you earn income, you pay taxes. A lot of people think that the government only collects taxes at the end of, well, the beginning of the year for the end of the previous year, so the April timeframe. But that's not true. The government earn income, pay taxes, earn income, pay taxes. So when you are a W 2 employee, when you're an employee, your employer is actually responsible for your taxes. So they collect your withholdings and they are responsible for submitting that to the government on a quarterly basis. So you might not realize that the government is getting money continuously throughout the year, but they are. So your withholdings for all the withholding taxes that your employer withholds from you, that is going to go to the government on your behalf. And when you file your tax return at the end of the year, you basically do a true up. This is how much money I actually made. This is how much taxes were withheld. Calculations are done based on your earnings, and then it's determined what your tax liability is supposed to be based on those earnings, and then it's compared to what you actually withheld and sent to the government throughout the year, and then that true up is going to say that you owe this amount or you paid too much and you're getting this amount back. Because of that simplified process, basically, if every single year you are getting a huge refund that's not due to a credit, because there are some credits that are going to give you refunds. So if you're getting a huge refund and it's not due to a credit, you might want to adjust your withholdings, right? So you've probably heard people telling you to adjust your withholdings if that's the case. So when it comes to this tax exempt status, if you do not fall in a category that you should be exempt, you are most likely in 99% of the cases going to be shooting yourself in the foot, because what happens is when you go exempt, you tell HR, don't collect any taxes, you're going to be getting your paycheck with no withholdings. Nothing is going to be sent to the government on your behalf. So that earn and pay system, you're earning. You're not paying your tax dollars based on that income that you earned in that period. And so when you actually go to file your taxes at the end of the year, well, the beginning of the following year, you are going to have that huge liability. So one creator specifically that I saw, she did say that you should take the amount that you would have had withheld and potentially do something with it. So that would, to me, that would sound like she's suggesting that you put it in an account that's actually going to grow. So you're going to earn interest on that money. And then you actually have the funds, because I can tell you, I've saved my clients almost $10 million in tax savings. And one of the ways that so many taxpayers are overpaying on their taxes is because when their tax bill comes, they have no funds to pay it. Interest and penalties are going to pile up daily. And if you don't have funds to pay your tax bill, it's going to accrue daily, and then the balance is going to get bigger and bigger. So that I heard one creator say that you should take the funds that would have been withheld, and I'm assuming you can put them in the market, you can purchase assets, you can do a lot of things with those funds. You just need to make sure that you have the funds available when the tax bill comes due, because I want it to be clear that going exempt is going to make the process of the government getting that money throughout the year, that is going to be taken away. So they're not going to get the funds throughout the year. And I did hear another creator say this is a tactic to slow down the funds that they're getting throughout the year. And if that is something that you want to do, by all means. I just wanted to explain what exempt means for a W-2 employee. And I did hear one creator say that employees can do the same thing as self-employed individuals, and that is just not the case. Self-employed individuals do not have withholdings coming out of their paycheck because they don't have a paycheck. They are self-employed. So they are responsible for their own taxes. So the same way your employer was submitting your taxes on a quarterly basis, as a self-employed individual, you would be responsible for doing that on a quarterly basis. That's where your estimated quarterly taxes come in. So I just want to make sure that you guys aren't confusing W-2 with self-employed, two different things. If you do decide to go exempt, I want you to understand what exempt means and what that's going to be doing to your tax situation. So if you are great with money and you're going to be able to take your paycheck when it comes to you and split what would have been withheld, and then you do something sensible with that withholdings, and then be prepared when you have to file your tax return. You're going to have a large tax bill. You might get hit with an underpayment penalty depending on what your situation is. All of those penalties are adding to your tax bill. So if you're fine with that because you've done smart things throughout the year with your money, that's your prerogative. But I wanted to explain what tax exempt would be doing if you went tax exempt. And I wanted to address one of the creators saying, if self-employed individuals can do it, you can too. That's not how it works, because they're self-employed and you are a W-2 employee. So you want to make sure that you understand the tax code is written differently for different scenarios. So if you have any questions, that is my video per day. And maybe my video on the retirement accounts is going to come back, because I listened to it yesterday and the sound was there. Anyways, I'm going on a tangent. But this is my video on the tax exempt scenario. And I hope that you guys, if you guys have questions, you guys can let me know in the comments. I will talk to you tomorrow. Bye.